the confines of 1 Center Street, here to convene a meeting of the NYCERS Proxy Committee. So I'm John Dorsa, representing the Controller's Office. We are not on the Proxy Committee of this board, but in order to help facilitate this meeting, we'll just simply call the roll and turn it over to the Assistant Controller, Mike Garland, who can give you his official title. But let me just start by saying, Teamsters.
Pat Stryker.
Thank you. Public Advocate.
Umair Khan.
Mayor's Office.
John Adler.
And we'd just like to note that Ray Santander from DC 37 has informed us that he is unable to make today's meeting, but if appropriate, he'll proxy any votes with Pat Stryker. If there's some provision that now we're not aware of in which he can't proxy his vote, if there's any other issues, we'll take those up before the full board. But if there's some disagreement between the 3 members today. So thank you for coming. We hope that you will enjoy what you hear today, and we'll turn it over to Mike Garland, the Assistant Controller, who can walk us through the materials today. And I'd also like to note, I might have to step out of the meeting, but you're free to stay as long as you need to finish the work of this fine committee.
Thank you, Mr. Dorsa.
Thank you, John. And for the record, it's the Assistant Controller for Corporate Governance and Responsible Investment. So thanks and welcome. As I believe the committee knows, the Proxy Committee formally meets typically 2 times per year. In the fall, we review all of the share owner initiatives from the prior year, approve initiatives for the next year. The spring meeting is really just where there are new issues that are not currently addressed in the proxy voting guidelines. We do proxy voting guideline revisions. And as you know, we just came through a major overhaul of the guidelines last year. So in addition to addressing any new issues that may come up, over the next couple of years, we'll tweak those guidelines as we identify issues that we would
May
like
I have one, because I've printed everything out and left that one.
No problem.
Thank you.
I'll take one too.
So there's actually only one action item for the meeting today with 3 components, 3 specific provisions. And then depending on the trustees' interest, I can give some other updates. But the action item speaks to our recommendation to revise the existing guidelines in 3 ways. First, under the section on election of directors, we want to expand the section on accountability, which currently speaks to the need or the expectation that boards respond to majority votes, whether for shareholder proposals or against directors, to also talk about a provision that under accountability for directors, that share owners, there are mechanisms to allow share owners to interact directly with and dialogue with the directors we elect. That's best practice and frankly common practice at most large companies today. There are some companies that don't provide for that kind of communication. This isn't really expected to change our votes. It's really a way of announcing our expectations to portfolio companies. In some instances, it could lead to an opposition vote where we were felt we were harmed by it, or some other investor who had good cause to speak to directors. But it's really of making explicit an expectation, I think, that was always implicit. This recommendation is informed by and is consistent with the policies of the Council of Institutional Investors, as are the other issues we're going to discuss. So all of these are informed by policies that are consistent with Council policy. There are red line versions of the recommended change attached. There's one other very minor tweak to that same section. That's the first sentence of the provision under 1.1e, where we've replaced the term where it used to say the systems expect portfolio companies to be responsive to share owners' votes. It now reads the systems expect boards of directors to be responsive because this is a director election guideline. Accountability is really about the board, not the company. Any questions on?
I think that makes sense. Board of directors.
Yeah, I think it's an improvement. The next issue.
So is that the one action item?
No, that's 1/3
Okay, fine.
of 3
Okay.
revisions.
Right. Okay, got it.
The next one speaks to the hedging and pledging of company stock. The guidelines already have a provision that says we support prohibitions on hedging and pledging of company stock. And although we always interpreted the spirit of the guideline to call for the need to hold directors accountable where there was abuse of hedging or pledging, it wasn't explicit in the guideline. And we realize that now that we're working with ISS to integrate our guidelines into the voting platform. I'm happy to briefly describe the risks with both of those issues and why it really is a serious board failure. Hedging. So with regard to executive ownership of stock, you want to align the executive's interests with the company's interests and our interests. So you want them to hold a significant amount of stock. It would be possible for an executive to hold stock and then go out in the market and hedge that position so they had no true economic exposure. And then they may be incentivized to take excessive risk or other things because they were no longer exposed to those risks. So while it's in some ways a compensation issue, it's ultimately a risk issue, which is why we would withhold support for the audit committee.
I'm curious, do we have some examples of where that's actually happened?
Less and less, it's become much less common, though I know these are issues that Teamsters have actually been quite active on in putting policies forward on hedging and pledging. I can give you, I did attach an article on each issue as background. Okay. And I can't remember what's in the hedging one, but there's some discussion.
That's fine.
The next one, I actually have a very good example because pledging of stock creates a different set of risks. Pledging is where an executive or a director takes the shares that they're expected to retain to align interests, and they pledge it as collateral for a loan on something completely unrelated to the company, likely. And the risk...
Something personal.
Exactly. So an example of why this is a risk to the funds is Chesapeake Energy, Aubrey McClendon, who had billions of dollars in Chesapeake stock that he pledged as collateral for his own investments in some gas-related investments that went south, those investments, triggering a margin call, triggering the essentially automatic sale of billions of dollars of Chesapeake stock, which then depressed the share price because so much shares got dumped in the market. So,
is he the guy who got a year?
Well, he was in court and then he drove his SUV into a wall. So he's no longer.
Who got a year?
I guess he.
And then what happened?
I guess he'd been convicted. I think
what occurred.
Yeah, well, and you and I have communicated about a more evil person, frankly, who really, the Massey Energy.
Oh, maybe I'm confusing.
Remember
29 dead?
Yeah.
29 dead.
Yeah.
I'm forgetting that guy's name. I forget that guy's name. Anyway. Not relevant to the matter at hand, and I'm not sure.
John wants to stay on topic.
Well, I'm not sure we're in the business of deciding who's more or less evil.
Yes.
I know we have a lot of power here at the NYCERS Proxy Committee. But...
So noted, but what was it? Anyway. So the proposed revision would make explicit that in cases of hedging or pledging abuse, which is not common, we would hold these directors accountable. Our position here is consistent with CII policy. It's actually consistent with ISS policy as well. Any questions on hedging or pledging?
So what strategies do you seek to employ in order to limit this?
So we already, any time, if a company didn't already have a policy in place, we would support if a proposal came up to put one in place. Where a company didn't have a policy and there was evidence of abuse, not just the lack of a policy, I think we would withhold support from the director. So this is two parts. It's A, to make our expectation explicit, and to actually trigger a vote, which, again, I don't think will be routinely triggered, but it will change some votes.
It's only, but Mike, it's only directors who serve on the audit committee?
Yeah, the audit committee is, so this is, and we had a lot of discussion, like, is this a compensation issue? But ultimately, it's the audit committee that is responsible for risk oversight, unless it's delegated to another committee.
Mm-hmm.
I will tell you, we're voting a company currently in which oversight for hedging and pledging is specifically delegated to the nominating and governance committee. In an instance like that, we would then withhold for the committee responsible. Okay. So where there's a clear basis.
Okay.
Don Blankenship.
Very good.
I was going to give you credit.
She's got a better memory than we do. And I'm surprised that you don't remember that.
I'm a little surprised. Yeah. Senior moment. I went to the shareholder meeting that year.
Safari and I share this.
Okay. Anything on?
So what's the other committee that you just mentioned?
Nominating and governance.
So it could be, so the three key committees of the board, these are our audit, compensation, and audit, comp, and corporate governance and nominating. Sometimes boards have other committees, and under the listing standards, the audit committee has responsibility for risk oversight.
Primary jurisdiction. No, so the reason why I was saying was if this one company, for example, it's not operating that in the audit committee, right? You're saying it's operating that this issue is going on in another committee. Because
the board has chosen to specifically delegate oversight, and we would, and I think we have the leeway.
The reason why I was going to mention that was because this page 14, the systems may oppose directors who serve on the audit committee if, and then we say executive directors have pledged their. Just to give more latitude, instead of saying audit committee, say the appropriate committee or the pertinent committee.
So I take the point. I think that we have the latitude elsewhere where we find committee failure. Okay. So what we would have here, and I appreciate because I agree, but I think we feel like we have the latitude where there's obvious failure of a particular committee, and I think it would be consistent with the guidelines here. Okay. But I point taken. And then the last issue speaks to, in many ways, there's two issues embedded in one, with the conduct and certain expectations about the conduct of annual meetings. And one is that to affirm that we support in-person annual meetings. This has become a recent issue. Mm-hmm. Where because of technology, companies are able to webcast or do audio annual meetings and conduct an annual meeting virtually rather than in person. And I think our perspective, and this guideline is it looks very much like the CII policy. We recognize that technology can be used to expand participation in the annual meeting for someone who can't travel there, but it shouldn't be used to replace an in-person meeting. It should be
strongly agree with that. And yeah. I remember you and I were on a call once.
Yes.
Posed a question and was totally ignored because it was on the telephone.
That's exactly
whereas if you're standing there, much harder to be ignored.
And that was 3 or 4 years ago. Now, in 2011, I think there were roughly 20 virtual only annual meetings. Last year, there were 155. They are surging. So while the council and other investors have had this policy in place for years, there's no teeth because boards are, there's no consequence. And so as part of adopting this policy, expressing our expectation, we are also recommending that we withhold support from the nominating and governance committee because it's a governance failure for companies that have virtual only annual meetings. And we're phasing that in. So only large, because companies, not all companies are doing it in bad faith, but it has implications regardless. So large companies who we're giving a heads up to this year, S&P 500 companies, if they commit to change for next year, we wouldn't withhold this year. But otherwise, we'll start withholding this year at S&P 500 and then next year all companies.
Mike, I don't know that this is related. Let me just raise it as a question. Some companies have sought to avoid controversy at their annual meetings by having them in remote locations as well.
Yeah.
So a company that's headquartered in New York that does its meeting in, I don't know, you probably know a location better than me,
Yeah.
but say Iowa, or I don't want to cast aspersions on Iowa. Guam? I don't know that they have.
Who's going to be offended by Guam?
The Guamians.
Antarctica.
Yeah, whatever. I think it has to be in the U.S.
Yeah.
if it's a U.S. Domiciled company. But anyway, you know what I mean.
I do.
And so, is that a concern?
Yeah, it's long been a concern. This is that approach on steroids.
Yes, right. By going nowhere.
And I can tell you, interestingly, that before at least you or I were affiliated with the New York City systems, that in the not too distant past, New York City filed shareholder proposals requesting that companies hold their annual meetings in an accessible place. The problem with that is, like virtual-only annual meetings, there are a core of investors who care deeply and a lot of investors who don't really care.
Right.
So this virtual-only meeting has really touched a nerve with some investors, but that didn't, it remains a problem. The solution to which I don't know, but yes.
I mean, do we want to say, I don't know, if we want to say something about accessibility as well?
I like that idea.
We could do that.
I do.
To say something like
at the end of the second paragraph, where we talk about virtual option.
So what I would like to do is companies hold in-person annual meetings, and we can put something in there in an accessible
location, a broadly accessible location or something like that,
yeah.
Which is hard to define, but clearly it's not.
Well, if it's broadly acceptable, that may just mean the facility is really nice rather than the location.
I agree.
Broadly acceptable location or whatever.
Well,
and easily accessible.
Easily accessible. That's
accessible should be in there, perhaps.
So what I'll do is I'll look at language from old shareholder proposals because it may talk about geography.
Right.
So I think that I like that, and I'm
friendly amendment.
Friendly amendment, and what I would say is because
let's go ahead and approve this
because. Well, let me raise this issue, the two issues, I guess, or a couple questions for you. One, I'm comfortable it does raise questions for the other four boards that have now approved it, so we may want to come back on that or maybe do it subsequent.
Yeah.
The other I want to be clear is I think stating that as an expectation is the right thing to do, but where this then takes action against a governance committee for holding a virtual-only meeting, I think it's too subjective about meeting location. So I'm not sure that it would necessarily prompt a withhold vote from directors.
No, so I guess what I'm suggesting, like your first paragraph
is expectation.
Is expectation. Let's just put it in there, and then.
Okay, so no, I agree. And then my question is procedural because I'd like to keep the guidelines aligned for the systems.
So I guess what I would suggest is. We don't need to do. It's not going to make a difference. The shareholder meetings are already scheduled at this point, so
it's not going to change the vote anyway. But okay, right. So you want us to put it on the queue for the next time we open it up
for the fall, and then we can stick it in there in the fall, and it won't be controversial. I don't think it is the boards, and then add to the guidelines for next year. Is that okay with you guys?
Yes.
So, and then there's one other expectation that is embedded here, again, consistent with council policy, and that is the expectation that directors attend the annual meeting.
Totally. It's crazy that you're a director of a company has an annual meeting and you don't show up. That's crazy to me. I mean, if you're going to be a director, you're going to be a member of a board of a publicly traded company, the least you can do is show up for the annual meeting.
Exactly, where you're elected.
So I just had a couple of quick.
Yes.
In the first sentence, in-person annual meetings provide chairman, in the heading, after the colon, why do you say 4? Just for my edification.
Yes, so there are proposals that have been filed, although they were no action successfully this year at the SEC, that were filed at companies that have virtual only, at Intel, for example, where there's a virtual only meeting saying, we want you to have an in-person meeting. And so we would vote for it. And part of it, it's a good observation, is that although we've now moved to a much more principles-based set of guidelines rather than very granular, they are still set up about what we're for and what we're against. So the notion of, and I could have put virtual only annual meetings and then said we're against that, but I thought it was important to also set this expectation about director attendance. So it was trying to fit it within the framework of the guideline.
That's fine. So the next thing was the first sentence, in-person annual meetings provide shareowners the opportunity to communicate to, I mean, it's just a word choice, but with as opposed to. And then the next line after in a face-to-face, unfiltered and real-time way, at least, if we take out the word way, would that still work? In real time, at least once per year.
What's the difference?
Oh, remove the word way.
I know, but what's the difference? Why?
It's like verbose. I mean, it's already a very long sentence. And I was just trying to make it.
Well, except it says, right, I mean, it says in a face-to-face, unfiltered, and real-time way. So what would you do? Say, you take out in and it would say face-to-face, unfiltered, and real-time? That doesn't really make sense. I think you actually have to leave it the way it is to make it,
leave the word way
make it grammatical.
It's just, for me, I read the sentence and I was trying to wonder if there was a simpler way of stating our goal.
I would take it out. I don't know.
But how would it work? You read the whole sentence.
Read in a face-to-face, unfiltered way.
No, he wants to take out way. He wants to keep. No, you said you wanted to take out way, not real time.
I was going to say yes. I was saying we could take out.
So way is modified by face-to-face, unfiltered, and real time.
Yeah. Exactly.
What do you want to take out?
I was just going to say if we could reduce the sentence in a manner.
What word are you taking out?
Maybe you should.
I was just trying to simplify the sentence a little bit.
Which word do you
think you
take out way, but it's fine. It's fine.
That's a technical term.
It's fine. Oh, and then the last one is just in the very last sentence. I think you're missing a period.
Yes.
And I think that is an immaterial change that I have seen, and that I don't think we have to go back to the other boards.
I totally disagree. As a member of the other boards, I think that period reconvene.
So, and I think we do need way here, and I'd also ask some latitude given that this is the last of the. I think I might have caught that already. Actually, you should.
That period is there in the next edition.
I haven't been on law review in like 9 years, but okay. All right, that's fine.
So those, and whether, I think you could, if everything is, if there aren't any other questions, you could defer to you collectively on.
Yeah, so I don't think we need a formal vote or motion or whatever. I just think, do we have consensus to approve these 3 changes that Mike has outlined to our proxy voting guidelines? And as I recall, at NYCERS, we are empowered to make these decisions, and then we just report back to the board.
I think it has to be ratified by the board, but I think that could be an after the fact. Okay. So I think we can act on what you tell us, but it's still, and Karen, we should confirm with Karen.
Or John, I think John. Yeah. So anyway, but let's just do this. Do we approve
the recommendations of the Controller's Office
to make these changes to the guidelines?
We approve these recommendations. I mean, we can take the vote.
No, we don't need a vote. Is there any problem with them?
I don't know.
I agree.
We're good. Okay.
But going back to your point, I think it would be like an ultra vires action for us to do something that would then give you consent. It would have to be the approval of the board to.
So I'm not sure what our bylaws are.
So the responsibilities and authority of the proxy subcommittee are in the IPS, although I know I'll confirm with John and with Karen. There
Make
is
sure we do whatever.
We're meeting in 2 weeks.
Yeah,
So
now the
if so,
question-
we can bring it for.
So here's the issue is the first, I mean, we've missed some and we understood that was going to happen, but the Duke Energy annual meeting is May 4th.
That's before the NYCERS.
It's just before. We have, I think, all the other 4 boards
I've approved it.
done completely, and I don't think we want to act.
So
We could act for 4 and not 5, but I think we don't want to go put it in
So
effect. We have all
let's
5.
ask John. I think John knows the answer to this. I'm pretty sure that the board at NYCERS has empowered us to make these decisions. And if not, we need to do it by May 4th. We can ask for an email,
Okay.
which we could then ratify the next thing. So let's just leave it at this. We agree, the committee agrees. If we need, if the board has not delegated this authority to the committee, then we can ask Karen to do an email ratification prior to May 4th, which is like Wednesday or Thursday next week. So we have to do it early in the week.
When I agreed, I'm also agreeing on behalf of Mr. Ray Santander, who was unable to attend today's meeting.
Right. So
It's unanimous.
I actually think, I don't know, I was thinking that we might actually constitute a majority just with 2 quorum and 2 city. But I think that's not quite a.
You have to have notice of a meeting.
Well, we're here.
No, but for
Okay. Anyway, we'll
we
figure
do
it out.
actually have-
We'll figure it out, and if in fact we need the approval of the board,
Okay, we can figure that out.
we'll do an email vote. We'll ask Karen to, or Elise to conduct an email vote. It won't be.
So, sorry, you can turn those
Is that
off.
you?
It's me, but you can kill it. Thank you. Sorry about that.
No worries.
Um,
I don't have an I don't use iPhones. Or I have one.
Oh, you're anti-iPhone.
Not the word, but
So that's the only action item. I did want to briefly give updates, and since we'll talk about the 2017 shareholder season in detail in the fall, I'll just do that very quickly. We've withdrawn most of our proxy access proposals, withdrawn roughly 50 of 70, and we're off to a very good start. For those that have gone to a vote, we've received majority support at both Humana and IBM in the past week or 2. And I think PACCAR, a smaller company with significant inside ownership, for the 3rd year in a row, we didn't quite get there. I don't know the exact tally. So we've had 3 votes. And as you saw the press release, but the gender pay equity was a new issue that's going quite well. We got some very good agreements. And we had the NRG vote no yesterday, where we opposed one of 2 directors put forward, well, not put forward by Elliott Management, reached a settlement agreement with NRG in January. So NRG is a coal-intensive utility, has set very ambitious carbon reduction goals, has a strategy that they had a rough 2015. The board changed management, and under new management, they appear to be performing well. They've cut back on residential solar, but they've committed to invest significantly in renewables. Share prices perform well, and in mid-January, Elliott Management and another investor filed 13 Ds that they had accumulated a 10% stake over the preceding weeks, and in less than the month, the board agreed to put 2 directors they put forward on the board and to create a business review committee to look at asset sales and cost cutting, among other things. And so we're deeply concerned that investors with an average holding period of about a year is now seeking to break up a company that's pursuing a strategy that we think is creating long-term value. And so have opposed the election of one of the 2 directors who stood as a company nominee yesterday.
Oh.
That director, among other things, has talked about the fact that when he ran for office in Texas, he said, "I've been battling this climate change hoax for 6 years." And it's a company that discloses climate change as a material risk and built its business strategy around seizing opportunities out of climate change. We didn't get the advisors, so the vote was lower than we would have hoped. It was about 7.5% against. But I did see some people from management out at the series conference and understand that many long-term owners called the company in advance of the vote to try to understand what was going on. So I think the silent majority of long-term shareholders have begun to engage in a way they weren't previously. And so I'd like to think that the significance of the engagement goes beyond the low vote.
But he's on the board now. He was approved.
He was already on the board.
Yeah,
He was confirmed.
and he's been elected, and this business review committee is going to come out with its recommendations.
And he'll be up
soon.
again next year of annual election of directors.
Correct.
Yeah.
Correct. And the settlement agreement only lasts a year.
It doesn't make a lot of sense to pick someone who's diametrically opposed.
So
you know,
this guy,
I think the
this
process.
Guy, Singer, the head of that hedge fund, Elliott Management, is very conservative activist, and so
Probably a good friend of Scott Proof.
maybe so.
So I just, their interests and our interests, as long-term shareholders are.
But we're long-term shareholders.
We are. Theirs are not. No.
Yeah. He's a short-term shareholder. What's the stock price done since this all? I mean, since he disclosed his position?
It has gone up significantly, but it had gone up under the new management till the day before trading day, before he filed his 13D. The company has significantly outperformed its peers in the index. So it was already doing well. I mean, clearly there's been a turnover in the shareholder base because of this. I think likely some other hedge funds. I'll tell you that our political disclosure proposal last year got 49.5% or 49.4%. This year it got 30%. I think that reflects probably a very different shareholder base.
That's really interesting. This was our proposal. We did a political disclosure?
Yeah. We focused largely on energy companies. They've been so active in the political process. This company, by the way, came out publicly in support of the Paris Agreement. I mean, this is a company really trying to navigate the transition. So,
until now.
Yep. Lastly, very quickly, but importantly, there is a bill in the House Financial Services Committee called the Financial Choice Act, which has numerous investor-unfriendly provisions, including one that would effectively eviscerate the right of the New York City pension funds and any other active shareholder from filing shareholder proposals. There was a hearing 2 days ago where this particular provision didn't come up, and then there was a hearing today where I think it did. Ken Birch from the Council of Institutional Investors was among those who testified. There's a lot of organizing going on. CII sent a letter. We put a statement in. I know that committee staff have received quite a bit of communication from investors. In the world we live in today, anything could get out of the House and through the House.
What do we call the financial what?
Financial Choice Act.
Good choice.
Okay,
so we are mobilized and active.
Mike, can I ask a question on this?
Okay.
So the current threshold is $2,000 for 1 year.
Yes.
Right. And their proposal is 3% for 3 years. One investor, is that right?
1% for 3 years.
1% for 3 years.
So Apple, I think someone said the number. It's like $7 billion.
Right. You have to have $7 billion in assets and
of stock in that one company.
Of stock, right?
Yeah.
And
I mean, we don't have.
Less than half.
As a rule, we're usually between a quarter and a third, or less than a half.
Right. My question is this, and you may not know the answer and not want to answer it right now. Is would we support a higher threshold? Since the reality is that $2,000 is such a minimal threshold that it allows folks without a lot of skin in the game to file shareholder resolutions.
Well, the $2,000 has been in place for a pretty long time. Right. I think if you were to index it for inflation, it would probably be about $2,500 or $3,000. I think that we often support proposals put forward by small investors. And so then the question is, where do you draw the line? I don't think we want to, at the margins, if the number were to go up some, I think that's understandable. I think the concern is that once you open that up, you don't get a nominal increase.
Right. I'm just saying, if they say, well, 2,000 is ridiculous, I'm just saying, yeah, well, maybe 2,000 is too low.
I think
Maybe 5 or 10,000 is a more appropriate figure. That's all I was thinking about.
Well, who does it damage?
Having 2,000?
Yeah.
Well, in some ways, it allows folks that don't really have very much skin in the game to file shareholder resolution.
And there'd be too many of them? Is that the concept?
Yeah, I just think it's a reasonable, I think when the threshold was set, $2,000 was a reasonable amount. And now, A, there's been a lot of inflation, but B, the stock market is much, much bigger now than when that threshold was set.
When was that?
I think it was 89. I should know. I went to the Hill and I did this part of the talking points, but
Yeah.
I can't remember. So I know that, when you index it, it isn't much, but I guess what I would say is the system currently that we have, it works. So
Why break it? Why, if it's not broke, why fix it?
the no action process at the SEC, we don't always like the result we get, but I think people view it as being administered fairly.
Mm-hmm.
Proposals that don't earn significant support from shareholders shouldn't really be a distraction because they get low votes. So, and there is certainly, some companies don't like shareholder proposals from anyone. I know that some retail shareholders have prompted particular animus from companies because they don't talk to companies or whatever, but that, I think the proposal is that some of the narrative around it is to try and exclude those gadflies, but it's structured in a way that would exclude everyone. I would mention that this is the result of a proposal that was floating around on the Hill from the Business Roundtable.
Yeah, I understand.
Which is, yes.
Right. Really what they do want to do is eviscerate it, as you said.
Yeah.
And clearly, it would be, it would be a terrible development to prevent longtime shareholders, serious shareholders like we are. The notion that, $170 billion pension fund wouldn't be able to file shareholder resolutions in the companies that it owns.
There's illegal voting going on, just like in our elections.
But we should acknowledge that there are very few institutional investors of our size who file shareholder proposals.
Mm-hmm.
New York State files a lot, CalSTRS and CalPERS sometimes, and then few, if any.
Right. Connecticut does some, don't they?
Yeah, on and off. And then smaller institutional investors episodically, and then retail investors. And some of those proposals are well crafted and some aren't, and some are long-term owners and some aren't. So I think if we're in a place where we have to have that conversation, but I think there's concern that while small increases may be appropriate, that's not what the outcome would be.
I understand.
It may be a Pandora's box.
Oh, I totally agree. I'd rather just keep it the way it is. But, again, if they say, well, we're not looking to eviscerate it, but we are looking to increase the threshold, I think for, folks like us to say, well, we think, 5 or 10,000 is a reasonable threshold, which I happen to think it is.
Right. But I'd rather have a discussion like that in an executive session about what might be our public position.
Sure. Okay. Anything else? Okay. So, I don't know. Do we need a motion to adjourn?
Well, I just want to ask, are you seeking any engagement on the Senate side?
Yes, and that's actually ultimately where this will be. And I was part of the CII delegation that went to the leadership of majority and minority leadership of the Senate Banking Committee. We met with Schumer's staff to educate people that this was coming down the pike. At that time, it wasn't actually out.
Mm-hmm.
And we're really working under the leadership and coordination of CII, which is better positioned.
Right.
But yes.
There's always an innocuous name.
They picked the
Financial choice.
Excuse me.
What could be wrong with
God bless.
Thank you.
Why do you hate choice?
Yes.
Yeah, it's
Okay.
like Peacemaker. That was Ronald Reagan's missile.
Oh, yeah, right.
Right. Okay.
All right. Are we done? Can we adjourn? Anybody object to adjourning?
No objection.
Okay.
For you or for Reddit?
So can we turn off? We're done here.